Welcome everyone to today's webinar, PPP Forgiveness, Indirect Rates, and the Incurred Cost Proposal. Today's webinar is presented by Robert Jones, founder of Left Brain Professionals, and we have special guest Stephanie Wilson with us, who Robert will introduce here shortly. My name is Liz Brigson. It's a pleasure to be your host today, and let's just go over a few of our quick administration items as we get started. First of all, we know that there's a lot of interest in this webinar today, and you probably have a lot of questions. So we are going to be monitoring the GoToWebinar questions box, and we will get to as many of your questions during the webinar as we can. So if you want to go ahead out there, hello, John. John has already said hello from New Jersey. We would love to hear from you and give you a warm welcome out there in the questions box. I'm seeing someone else is buried under snow, and I'm in Michigan, can definitely relate to that. So thanks everyone for saying hi out there. Today's webinar will be an hour and a half. That means we'll launch 7 poll questions. And to receive credit for today, you'll want to respond to at least 5 of those 7 poll questions, but we do hope that you'll respond to all of the polls. In order to qualify, like I said, if you do qualify, you'll be able to download your CPE certificate from your Incourse dashboard. Those certificates become available for you an hour after the end of each program. And if you have any questions at all about polling questions, CPE credit, you can always email us at support@incourse.com. Well, it's a pleasure to welcome back Robert Jones. Robert has been a long time Incourse presenter, and we just are so appreciative of Robert and Jenny, who's on the line with us today, who will be helping with questions, and the whole team at Left Brain Professionals, because they are really dedicated and committed to helping accountants, whether inside an organization or an accounting firm, serving clients who manage government contracts. Robert has a background in accounting and operations. He's been a controller. He's directly managed defense contracts. He's an instructor and a speaker, and just brings so much of a wealth of knowledge. Today, because today's topic is also kind of spreading over between the accounting world and the legal world and the regulatory world, Robert invited Stephanie Wilson to join us. Robert will introduce Stephanie as we get started here, but we're really glad that you're here with us. And Robert and Stephanie, thanks so much for joining.
Yeah, good morning. Thank you. Again, yes, our topic today here is PPP forgiveness. A lot to talk about with the effects on government contractors. Just quickly about us, if you've never joined one of our webinars before, Left Brain Professionals is a boutique accounting firm in that we work only with government contractors. So we deal with the FAR and CAS on a daily basis. We practice primarily accounting system design, implementation, and audit support. We do a lot of work helping clients achieve an adequate accounting system, supporting various DCAA, DCMA audits, training, and obviously special topics like this one here today on the PPP forgiveness. I'll let my colleague Stephanie Wilson introduce herself for a moment.
Hi everyone, I'm Stephanie Wilson. I'm a partner and a co-director of government contracts practice at our firm, Baronsweg Leonard. We are located just outside of Washington, D.C. We are a business law firm, and a large number of our clients are government contractors. And as part of my practice, particularly over the last year, I've been advising government contractors and also working with their accountants on going through the PPP loan application process, and now currently through the forgiveness process.
All right, our learning objectives for today. At the end of today's session, you should be able to describe why government contractors should apply for PPP forgiveness, list the eligible expenses that qualify for forgiveness as a government contractor, explain the impact of Section 3610 assistance, describe how to report PPP forgiveness and Section 3610 on the incurred cost proposal, and explain the effect of PPP and Section 3610 on indirect rates, as well as list the record keeping requirements. We do have an opening poll here, please.
To get started, we thought it would be really helpful just to ask the audience, what is your knowledge of PPP forgiveness and the tax implications? So this will help Robert and Stephanie really guide the presentation to know your background and baseline with these topics. So we'll leave this open for about 5 more seconds here. Take a look at the results and close it down just about now. All right, so we have most popular answer here. I understand the basics, but could use clarification, followed by I'm not exactly sure what qualifies for forgiveness. And then some of you understand the qualifications and not necessarily the tax implications. We have a couple experts on with us as well who are fully aware. So definitely we know that we're going to be able to help all of you today, no matter what category you fall in. But thank you so much for letting Robert and Stephanie know where you're starting from.
Yes, and so I do want to talk just briefly about the tax implications. Certainly there are other webinars out there who are taking a deeper dive. Obviously, the important thing to know is that Congress intended for PPP to be tax-free. I think most everybody knew that. Unfortunately, the IRS took a stance early on that while they said the PPP loan forgiveness would be tax-free, that they resorted back to traditional treatment of how those expenses would be treated otherwise, and said, well, the expenses would not be deductible. And so if you did the math on that, it was easy to understand that, well, if the loan forgiveness is not taxable, but I can't deduct the expenses, well, then guess what? Effectively, the loan forgiveness became taxable. Congress did step in on December 27th with some year-end regulations and made the expenses deductible. And we do have just a quick little scenario here for you to show you what it would have looked like. So again, let's say you had $1 million in revenue, you otherwise had $950,000 in expenses, you would have had $50,000 in taxable income. But if and you notice that the revenue line doesn't change because again, the IRS said, okay, well, let's say, and in this case, I'm saying it was a $100,000 PPP loan and forgiveness. So the revenue line doesn't change, right? Because they said, well, we're not going to tax that, but they said, well, but we're not going to let you deduct, right? That spot in the middle was when the IRS said, okay, we'll honor the revenue side not being taxable, but we're not going to let you deduct the expenses. Well, then guess what happens? If you submitted $100,000 of expenses to support your forgiveness, then previously you would not have been able to deduct those, and effectively you would have had a taxable income of $150,000. But after December 27th, you see it goes back, and so you still now only have $50,000 in taxable income. All right, I'm going to turn it over now to my colleague, Stephanie, and let her dive in here.
So, one of the reasons we're here today is because government contractors have some additional accounting and record keeping considerations to keep in mind when they are applying for PPP forgiveness that other businesses don't. And so the focus today is on the proper treatment of PPP loan forgiveness and other COVID-19 relief programs, which we'll discuss, and not on the specifics of the programs themselves. However, we think it's important to have some knowledge of the basics of these various relief programs to understand the relief provided and why you need to treat those funds in certain ways. So the general concept as it relates to the treatment of all of these programs is the same, and that is no double dipping. So the second round of PPP funding in December of 2020, Congress added an additional $284 billion to the Paycheck Protection Program for small business forgivable loans. So that brought the total program level to $806 billion between both the first and the second rounds of available funds. The last day to apply for and receive a PPP loan is March 31st, 2021. This program is open, or these funds are available to both first-time borrowers, so companies and businesses that did not take advantage or were not able to take advantage of the program last year. And with some limited exceptions, the standard for eligibility for those first-time borrowers hasn't changed at all. It also allows certain eligible borrowers who previously received a PPP loan to obtain what's called a second draw loan. And so those are second PPP loans that are made to borrowers who previously received a PPP loan and will use the full amount of that initial loan for authorized purposes on or before the expected date of disbursement of their second loan. And there are the same eligibility requirements as first draw loans with some limited exceptions. So talking about PPP loan forgiveness, our focus today is really on the treatment of PPP loan forgiveness. So we'll not get into all of the details or the nuances of the actual forgiveness application process today, but we still want to provide a high-level overview of some of the fundamentals of the PPP loan forgiveness process. So when do you apply? You submit your forgiveness application within 10 months after the end of the covered period to avoid paying principal and interest. And so the covered period that's referenced there is either somewhere in the 8 to 24 week long period after the loan disbursement, and that's that time period in which you use the PPP funds. Eligibility means you have used all of the loan proceeds for forgivable purposes, and you have maintained the required employee and compensation levels unless a certain safe harbor or exemption applies. And so there, the forgivable purposes, that's something that we'll discuss in a few minutes. But there are specific things that the law sets forth that you can use these loan proceeds for. And the way that it's calculated is to receive full loan forgiveness, a borrower must use at least 60% of the PPP loan for payroll costs. And then the forgiveness amount is calculated in a proportional manner so that 60% of forgiveness is for payroll costs. So a question that I've received quite often, I know Robert has as well, is can government contractors even receive PPP loans, and are they even eligible for forgiveness if they do receive the loans? And the answer is yes. So government contractors are eligible to receive PPP loans. They're eligible to receive forgiveness. And it's important to note that the PPP loan forgiveness can reduce indirect costs in a time of reduced direct costs. So they do have a benefit that can be taken advantage of there.
All right, and Liz, we've got another polling question, please.
Excellent. So we're going to check in quick and do a recap on what Stephanie just talked about. Payroll Protection Program loan forgiveness can increase indirect costs in a time of reduced costs. Excuse me, direct costs. So true or false? And we'll give it just a bit for these results to come in here and the responses. This can be a little tricky, Robert. I know we've had a few questions like this on prior webinars for the relationship between direct and indirect costs. And sometimes it can be a little tricky. Why do you think that is?
Certainly part of the reason is that some companies will treat a cost one way and other companies will treat that same cost differently. Great example of that are purchasers or buyers in an organization. They're typically an indirect expense for most companies, but you do have some companies who treat them as direct, or I'll say attempt to treat them as direct. And so as you look at from company to company, those differences can cause confusion.
Well, let's go ahead and close the poll now. And Stephanie, how did we do? I went back to the prior slide to take a look. It looks like 62% of the audience said true and 38% said false. So can you recap that last point from your prior slide?
Oh, Stephanie, are you on mute?
Yes, sorry about that. You're right. So what we had said is that the PPP loan forgiveness can actually reduce indirect costs in a time of reduced direct costs. And, a little bit later in our presentation today, Robert's going to discuss exactly why that is.
Thank you.
All right, so the next thing that we're going to turn to are a little bit of an overview of the eligible expenses for PPP loan forgiveness. And again, this is specifically what's set forth in the PPP regulations as far as what counts as eligible expenses that the loan can be used for, and that a company could then obtain forgiveness for spending the loan in that manner. So this is different than the concept of DCAA allowable costs. And so the allowability of any of these costs, that is still subject to the same rules in Part 31. So what counts as an eligible expense? So from the initial legislation that came out in early 2020, they made clear that to be eligible for loan forgiveness, you can use your funds on payroll costs. So that includes labor and salaries, group health benefits paid by the employer, state and local taxes, and also retirement plan contributions. It also included mortgage interest, rent, and utility payments. And then the recent legislation from December did add some new categories of eligible expenses. So those categories apply no matter when you received your PPP loan, whether that was in the first or the second round, or whether it's a first or second draw loan. And so what those include are covered worker protection expenditures, which is PPE and so protective equipment, and costs to comply with COVID-19 federal health and safety guidelines. So, for example, if you set up some, plexiglass partitions, or we're doing temperature checks at the door, you provided masks or gloves or anything like that in the office, those would qualify. It also includes covered supplier costs. So that includes certain expenditures to suppliers that are essential to the loan recipient's current operations. It also included covered operations expenditures. And so that is example like your software or cloud computing services that you use for your HR or accounting or some similar applications like that. It also includes covered property damage costs. And those are costs that are related to damage that was incurred to some businesses during the 2020, the public disturbances, particularly over the summer, those that were not covered by insurance or some other compensation. And as I mentioned, all of these categories apply to both the original PPP loans as well as new PPP loans. The only exception is if your forgiveness has already been processed, they're not going to go back and reopen that up. But for the vast majority of borrowers, they're still going through the forgiveness process, and so they can take advantage of all of these different categories. And again, that 60-40 split that I mentioned earlier between payroll and non-payroll eligible costs is still maintained for both the first and the second draw loans. So forgiveness is based on payroll records and other documents supporting allowable costs. So when you apply for PPP loan forgiveness, you'll need to have documentation that shows that you incurred these eligible expenses. And so depending on the size of your loan and some other considerations, you may either be required to submit that documentation as part of your forgiveness package, but at least everyone will need to maintain this documentation in the event they are audited at a later date. And so for government contractors, in particular, you need to be very careful to make sure that your timekeeping records align with the same period as payroll costs used to claim forgiveness. And this is true across the board, but as we'll discuss, it's very, very important as far as tracking your direct and indirect costs to make sure that these records align. And so contractors will need to select which employees and which jobs benefited from the loan amounts, or the amounts that are applied for forgiveness. And so this next slide is sort of a visual of that, and it shows, using either the 8 or the 24-week period, that you need to make sure that you are applying for forgiveness for costs that sort of line up within these specific time periods, that you want to make sure that your payroll records line up with these direct labor costs that you have for each of these time periods. And again, with the new legislation, it's no longer now either 8 weeks or 24 weeks. It's any time between that 8 and 24 week period. So as long as you've used up all of your expenses, you want to choose the time period that sort of maximizes the amount of forgiveness that you're going to be able to get, and that you'll be able to sort of take advantage of, from the accounting and tax side. So all PPP forgiveness amounts should be used for indirect costs. And so the question is whether, some people ask whether direct costs qualify. And so generally not on government contracts. I mean, they technically qualify for forgiveness, but Robert will get into some explanations as to why we don't necessarily want to apply forgiveness amounts to the direct costs. And there, could be some distinction there if you have commercial direct costs versus, direct costs that you incur on government contracts. But that could still have an impact on your overall rates. So for sort of simplicity's sake, to the extent possible, a recommendation is always to not use the forgiveness amounts towards direct costs. You try to use them only for indirect costs. All right, so Robert, I think you were going to speak a little bit on the strategy.
Yes. So what we've got here, just continuing on with Stephanie's comments, we need to take this strategy and think a little more about how we're going to apply these dollars. So I want to kind of put commercial companies and government contractors kind of side by side as we talk about this. And I am just going to back up a couple of slides for a moment, just so you guys have a visual of what I'm talking about here. When we talk about the forgiveness eligible expenses, such as payroll costs, for commercial entities or otherwise non-government contractor companies out there, they typically have one payroll expense account, right? And they don't really care whether it's direct or indirect. I mean, they have other ways of evaluating that stuff. But typically when we look at the financial statements for a non-government contractor, we often see a single, salary expense, labor expense, whatever they call it. In the government contracting world, we have to break that out, right? We have to have at least direct labor, overhead labor, and G&A labor, because that's the only way to properly calculate our indirect rates. We know that a portion of that labor goes into each the overhead and G&A pools. And so we have to have separate GL accounts to capture those dollars and to properly calculate the rates. This is where when Stephanie said you want to apply from a labor perspective and really from all costs, you want to focus on applying the PPP forgiveness to the indirect expenses. And again, we'll talk a little bit about why. But visually here, this is what we're talking about, is being able to separate those expenses out. And let me get back up here to my other slide. The other thing that you'll need to do is to decide, and this is where, and I just talked to a potential client yesterday who had asked some questions about this, and we shared some info and we shared some strategy ideas with them. Essentially what I've told people is, and forgive my word play with the numbers, because I'm not trying to get you to do something wrong, but what I'm saying is play with how you're going to allocate these dollars, because they will have an impact on the calculation of your indirect rates. Again, we'll go into some details of that a little later. But as those of you who are familiar with government contracts and you're familiar with this concept of the indirect rates, we've done some other webinars on it in the past. If you need a refresher, if you need some info, contact us, contact Liz. We'll point you to some other webinars that will get you that base info on indirect rates. But you can imagine then, if you're taking forgiveness dollars and you're going to be applying those to some of those pools, how you apply them to each pool will have an effect on the outcome of the indirect rates. And so that's where we say there really is a strategy that's involved in how you want to do that. You also need to consider that if you have the employee retention credit or really any of the other programs out there, anything that's based upon wages, you have to use different dollar amounts, right? So that's going to be the other factor to consider. You want to make sure that, let's say you had $500,000 in payroll expenses for this year. And of that $500,000, remember, keep in mind, some of that will be outside of your period, right? So again, whether you choose an 8-week or 24-week period or something in the middle, you're obviously going to have dollars that fall outside of that period. So those are going to be excluded. If you've got the employee retention credit or anything else that's based upon dollars, keep in mind that you cannot use the same dollars across programs. So if you take this portion of payroll dollars and you apply it to PPP forgiveness, then that portion of dollars for that time period is not going to be eligible for the employee retention credit or something else. Again, the big concept that Stephanie opened with, and we're going to try to drive home the point today, is no double dipping. And that's going to be difficult because there are so many programs related to the COVID-19 relief, and we know that a lot of companies have participated in more than one of those programs. All right, Liz, we've got another polling question here, please.
All right, very good. So this will be our third poll question. Which payroll cost is an eligible expense for Payroll Protection Program forgiveness? We'll leave this open for just about 30 seconds or so. Question coming in from Vicki, will the slides be available after the seminar? And that's a great question. So you can get the slides and you can follow along with the slides right now. You can download them from the GoToWebinar control panel. It's called Handouts. And when you double click the attachment, it's going to launch in your web browser. So you can get the handouts there. If you want to access the handouts after the webinar, you can also navigate to your in-course dashboard, go to your past events, navigate to this event, and the handouts will be right there for you along with your CPE certificate. So hopefully that's helpful. Usually if someone has a question, multiple people have the question. So great opportunity to recap there. And we do have 90% of the audience has submitted responses. So we'll go ahead and close the poll, look at those results. And it looks like the overwhelming majority of you say all of the above.
And that is correct. D Delta for PPP forgiveness. And again, just a reminder of what Stephanie said, the PPP eligible expenses are the same for government contractors and for other businesses. There is no difference in the eligible expenses, but we will talk about how you apply those for direct versus indirect expenses when we talk about government contractors.
It's so, as Robert mentioned earlier, there are multiple forms of COVID-19 relief that government contractors and other businesses have been able to take advantage of. And that's also going to be part of the discussion today. So before Robert dives into the specific accounting treatment of these COVID relief programs, I'm going to provide sort of a quick overview of these various programs. This is not an exhaustive list of the types of relief that are available. You know, there are some state and local relief programs, there are some other benefits that are out there, but these are the ones that are most frequently used. So this is one that is specific to government contractors, and that's Section 3610 of the CARES Act. And so what this provision does, it allows, although it does not require, contracting officers on a contract-by-contract basis to provide additional funding to contractors to keep their staff in a ready state while idle due to facility closures or other restrictions preventing the completion of work. And so this program has been extended until March 31st of 2021. So it is still in existence. And again, that's a program that is not, you know, required for all government contractors, but is one of several different options that contractors and their contracting officers have been able to use over the last several months to, you know, make sure that their contractor staff is ready and available to perform on site when the time is right. So another form of COVID-19 relief is the employee retention credit. And so this is a refundable tax credit against certain employment taxes. And again, there was legislation passed in December of last year that modified and extended the employee retention credit, or the ERC, for 6 months through June 30th of 2021. And so this program is a little bit unique in how it was extended. So several of the changes in this program apply only to 2021, but some of them do apply to both 2020 and 2021. So if this is a program that you know, a government contractor or any other business has taken advantage of, they just need to be sure that they understand, you know, what provisions apply to certain tax credits here. And so another commonly used provision or a COVID-19 relief program is the Families First Coronavirus Relief Act. And so this is legislation that provided for 2 types of paid leave during the pandemic. So the first is the Emergency Paid Sick Leave Act, and that entitles workers to up to 80 hours of paid sick time when they are unable to work for certain reasons related to COVID-19. And there's also the Emergency Family and Medical Leave Expansion Act, or expanded FMLA, which entitles workers to certain paid family and medical leave. And so under this program, employers are able to receive refundable tax credits to reimburse them for the costs of providing this paid sick and family leave wages to their employees. So the FFCRA covered leave was mandated for those covered employers through December 31st, 2020, which meant that, up through December 31st of last year, if you were an employer who fell, within the scope of this program, you were required to provide this leave. That is no longer the case, but again, the legislation at the end of last year did extend the tax credits that are available for paid leave that an employer voluntarily provides from January 1st to March 31st of this year. So again, that is no longer mandated, but if an employer voluntarily provides this paid sick leave or paid EFMLA through March 31st, they can still take advantage of those tax credits.
All right, let's talk now about the impact of Section 3610. This is the part of today's presentation where we're going to start talking about the incurred cost proposal and indirect rates. So as a reminder, Stephanie said that Section 3610 is available and continues to be available through March 31st of this year, but it is not required. So again, there's no requirement for the contractor to apply and use it, and there's actually no requirement for the contracting officer to grant it. One of the biggest reasons on the government side is that there does still have to be funding available to cover those expenses. So obviously, if there's no funding available, then the contracting officer is not going to be able to honor the request. It is negotiated on a contract by contract basis. So again, if you've got multiple contracts, just because you get Section 3610 approved on one does not necessarily mean you would get it approved on another contract. It does add a CLIN or a contract line item number to the contract that will either be a cost type or a fixed price CLIN. Note here again that wages paid using the 3610 funds cannot be included in the eligible payroll expenses for PPP forgiveness. This goes back to that concept of no double dipping. This is also why one of the reasons that we say to apply the PPP forgiveness to indirect costs and to not apply them to direct costs, because in the government space, you cannot be paid, reimbursed, or receive credits or something twice for the same dollars, right? So if you have Section 3610 on your contract, then those wages, that idle time specifically on those contracts, are being paid for by the government. So you cannot use PPP forgiveness or any of the other paid leave programs to cover those exact same dollars for those same employees in the same time period. Now, I guess I do want to pause there and say, you could in theory have a single employee throughout the year or throughout 2020 and 2021 who part of their payroll dollars were covered by 3610, part of their payroll dollars were covered by PPP forgiveness. You may get an ERC credit for part of it. You might get paid leave credit for part of those dollars, again, across an individual across the entire time period. But the exact same dollars for that same day, same period type of thing are going to vary. And that's one of the reasons why, again, for government contractors, the reporting, your documentation is super, super critical, because not only do you have to deal with applying for PPP forgiveness and maintaining those documents for potential audit related around that program, that obviously as a government contractor, you are at risk and most likely will incur additional audits, especially if you have cost type contracts and you are submitting an incurred cost proposal. You can bet that the government is going to be asking questions about whether you applied for PPP forgiveness or any of the other programs, and making sure that you accounted for those dollars correctly in all of your rates. So how do we report the Section 3610 on the incurred cost proposal? Again, our guidance to everybody up front on the incurred cost proposal in general is expect questions from DCAA or whoever your cognizant agency is. Expect those questions up front. Many of you are, if you've already been doing incurred cost proposals, you're used to getting, an email or some kind of notification from your cognizant agency, usually a few months prior to when it's due. They kind of do a check-in reminder. Hey, remember you've got your incurred cost proposal. They may ask questions. They're trying to do a survey to see what's going on. You can expect that then, and when you submit an incurred cost proposal, and if you have an audit on an incurred cost proposal that covers any of these time periods, they're going to ask, did you get PPP forgiveness? Did you get ERC? Did you get any of these other programs? They're going to want clear documentation showing how you accounted for all of those dollars. So again, for government contractors, another level of scrutiny, another layer of scrutiny, and it means additional paperwork to be able to support those questions. This whole concept of the no double dipping really stems from FAR 31.201-5. And it simply states that it requires contractors for any rebates or credits to be accrued back to the government as a cost reduction or a cash refund. This is not a new clause. This is not specific to PPP or any of the COVID-19 programs. In fact, this clause has been around for a while. And one of the main reasons that it comes into play outside of all of this COVID-19 relief stuff, the government wants to make sure that if you're getting any kind of rebates, quantity discounts, or something from your suppliers, that you're incorporating those reductions, rebates, credits back to the government, again, in the form of a cost reduction or a cash refund. So, if you get some kind of rebate or credit and you apply it to the account, right, and so your dollar value comes down and that flows through your rates, then you've done the appropriate thing. And so that's really all that is applying here with all of these programs, is that if you're getting any of these tax credits or other stuff back, we have to make sure that those are incorporated into the rates and applied appropriately so that the ending rate reflects those proper dollar amounts. On the ICP, again, because, excuse me, there will be reporting items since the credit will not occur in the general ledger. That's going to be one of the key things, is that the timing of when these credits occur and how they're reported in the GL. And this, again, is going to apply for PPP forgiveness and for Section 3610. How all of these items are reflected in the GL are not necessarily going to line up to how we would normally report these kinds of items in the incurred cost proposal. Another reason why for all of this stuff at the end of when all of the COVID-19 relief stuff is complete, my vision for any of our clients is that you've got your tax return, your income tax return, and the appropriate stuff that's related to it. You've got your PPP forgiveness application and all the documents that you use to support that. If you've got contracts that you applied for Section 3610, you're going to have those contracts and the appropriate documentation. If you've got cost type contracts and you're submitting an incurred cost proposal, you've got your incurred cost proposal, and you're going to have elements from all of these other pieces that are going to flow through. Again, your payroll taxes, so your 940, 941, where you get those refundable tax credits. If you applied for some of those, you're going to have documentation that supports those. So you can see where not only within a category there's additional documentation, but for government contractors as a whole, especially when we look at the incurred cost proposal, we really have to look at and incorporate information across all of these different formats and bring that information in. For PPP forgiveness, the adjustments on the incurred cost proposal will show up in the adjustments column. And I've got a couple of screenshots to show you what this looks like. We recommend having a Ppp loan forgiveness or a COVID-19 relief forgiveness worksheet or separate workbook as part of your incurred cost proposal, and include that with your ICP submission, right? Give it to them up front because they're going to ask for it. So even if you don't go through a full audit, Many of you are aware that you may be low risk. Guess what? The government, whether it's DCAA or another cognizant agency, they still kind of, they thumb through the file, they look to see, does it make sense? Is there anything that stands out? Was there a significant shift in rates that's not explained? And again, because of everything that's happening with COVID-19, while they're not going to be able to audit everyone, I feel fairly confident that they're going to do at least a little more digging, and they're going to see, did you get a PPP? Did you get one of these other programs? And did you properly report it and account for it in the incurred cost proposal? Here's an example of what a Schedule B looks like. So Schedule B is for your, is for the G&A expenses. This is our template. If you want a copy of our version of the incurred cost proposal template, shoot us an email. Be happy to get a copy of that out to you. But you can see there's an adjustment column there. So you're going to have your general ledger balance for those accounts, and then you're going to have an adjustment, right? You're going to take out dollars that were applied, again, in this case, for G&A. If you took some of those PPP dollars and you applied them to G&A labor, then you're going to have an adjustment here that reduces some of that G&A labor. You're going to have a note, right? So we put a note over there what that is, and underneath, we put a description. We say what that note means and why we did that. Again, in this case, make sure that you have another worksheet or something and reference that so it's very clear. Oh, I took $100,000 out of G&A labor for PPP forgiveness. You make a note of that. You got your separate worksheet. I can flip to your worksheet and see, let's say as an example, you got $300,000 in PPP forgiveness, and I look at it and I see that you applied $100,000 to overhead labor, $100,000 to G&A labor, and you applied another $100,000 to some to other eligible expenses. Want to be able to track that through and know that it's treated appropriately in the incurred cost proposal. The section 3610 and how it's reported on the incurred cost proposal. Remember that I said with section 3610, the contracting officer is going to add another CLIN or a contract line item number, right? So you've got a CLIN for phase 1 of the project and a CLIN for phase 2, or however your CLIN structure is broken out on that contract. Now you've got a CLIN 3 or 4 or 5, whatever the number is, and it says, section 3610 readiness or whatever they titled it. That's what it is, right? They're paying you to be ready. That's going to be a separate line item on your contract. You're going to have to report that separately on the incurred cost proposal. Be able to segregate those costs out and show them appropriately. That means that it also needs to be a separate project or a task in your timekeeping system and your accounting system, right? So that when the auditors come in, they go back. Those of you who've been through audits, what do? They look at the dollars. They tie the dollars to payroll records. They tie the payroll records and the dollars to the timekeeping system, right? They want to make sure that across all of that stuff, I can see the employee entered time, the dollars were charged to the general ledger. We paid the employee. We paid taxes on those dollars, right? That's the general process that auditors are looking for. And again, it will be treated as a separate line item on Schedule H, which I'll show you in just a moment. Again, another reminder that you cannot claim PPP and Section 3610 on the same cost. So if you're getting Section 3610 for that readiness on that particular contract, then those employees are charging direct on that contract in a ready state, even if they're not working, whereas they might be charging a different type of project or task on another contract. Note that Section 3610 would apply to the direct costs. This readiness aspect, and not to regular PTO or one of the other extended leave programs. And this is one that's a little bit wonky, right? Because typically if we think an employee is idle and they're not working, then they're not charging direct. But in this case, because the government has given us a contract line item that we are delivering readiness, right? That's what they're paying for. The deliverable in the contract under this new CLIN is readiness. So even if the employee isn't really working, because they're unable to, right? They can't get to the site because it's been shut down. The government is paying for the readiness, and so it gets charged appropriately on this contract. Again, it's just a sample screenshot here of the Schedule H from the incurred cost proposal. You see that on Schedule H, contracts are listed here by their contract types, or cost, T&M, and fixed price. So whatever type of CLIN was added to your contract, you would report that appropriately here so that those dollars are separated out and easily identifiable. Liz, another polling question for us, please.
All right, that sounds good. This brings us to our fourth poll question. Recapping on the Section 3610. Section 3610 is which of the following? And while we're waiting for audience responses to come in, Jenny, are you seeing any questions that we might have a moment to address right now?
I do have a question that came in. Someone has asked, please clarify if a small business uses contractors on an as-needed basis, can the business apply the non-employee compensation for forgiveness?
So the answer to that is no, right? If these are not your employees, they're not labor, so they don't fall into that payroll they don't fall into the payroll category. I'd have to lean on Stephanie a little bit as to whether or not they might fall into one of the other categories. Because again, there were some additions that were added for the second round that do apply to the first round if you have not applied. So Stephanie, can you see a situation where a contractor, a subcontractor for a client might be able to apply forgiveness to those dollars?
No, I don't think there is. I think even in the new categories for forgiveness, they're more talking about actual systems that you pay for and not subcontractors. So, if you use an HR computing system or whatever, that's one thing. But if you outsource your HR, I don't believe that that would necessarily be covered.
Yeah, that was my understanding of it too. Because remember, those employees are, those people, I should say, are employees of another organization, and that organization would have to apply for PPP forgiveness on their own.
Right, that actually kind of fits in with that concept of double dipping. Like you can't have two companies counting for this employee's time at the same time.
True.
Makes sense. That was a really good question to cover. Let's take a look and see how the results came in. So it looks like most popular answer leading is both A and C.
And that is correct. D delta is the correct answer. Remember that Section 3610, it is available. It continues to be available through March 31st of 2021, but it is not required, and it is negotiated on a contract by contract basis.
Excellent.
All right, now let's talk about PPP and 3610 effect on indirect rates. So again, just a reminder that FAR 31201-5 requires any rebates or credits to be accrued back to the government as a cost reduction or a cash refund. This means that, and again, this is why you see when Stephanie said earlier that our recommendation is to apply those costs, those PPP forgiveness, to indirect costs. This would result in reduced fringe, overhead, and G&A pools, right? So if you've got all your expenses out there, you're getting PPP forgiveness back, and now you say, okay, how am I going to apply these dollars to my cost structure? If you apply them, some of those, again, some of PPP forgiveness is going to apply to the fringe pool, right? Remember that fringe are your employer taxes, health insurance, retirement, those types of things that are in fringe. Remember, some of those expenses qualify for PPP forgiveness. So it's very likely that a portion of your PP dollars would apply to the fringe pool and would bring your fringe pool down, right? That would, in theory, reduce your fringe rate. Similar for overhead and G&A pools, right? So we know that some of those dollars are going to be applied to overhead labor and G&A labor, and some of those dollars, would apply to some other types of expenses that would otherwise be categorized as overhead and G&A. Again, bringing those pools down. This is really important at a time when we know many companies have shifted employees from direct to indirect, right? In that situation where they didn't have 3610, And we've seen this in the past with many other times through government shutdowns, through delays in contract award, and other situations where contractors had the skills and the knowledge on staff, but there was some issue in being able to do the work, right? Again, during shutdowns, we've seen this, right? The government, Congress, can't get along, can't get their act together and pass the next funding bill. So what happens? We go into these limited shutdown periods. And so a lot of contractors end up in a situation where they can't do the work. We've seen situations where there's a delay in making an award, or there's a stop work order, or various things, again, that affects a contractor's ability to actually perform the work. Well, many contractors say, I don't want to rush to lay off these employees because I know the moment I lay them off, well, guess what happens? They start looking for work, right? So even if they get some type of unemployment, right? It's for many people, it's still not enough for them to survive and do what they need to do. So what do? They start looking for a job. And what happens if they find a job while they're laid off? Well, guess what? Then there's a very good chance they're not going to come back to work for you when your work comes back and you're ready to bring them back on staff. So what do a lot of contractors do during those situations? They shift and say, while I don't have direct work for you, I'm going to put you on indirect for a period of time so that I keep you here and I know that I have you. Now, we know that internally, right, sometimes that means, hey, we're going to work on policies and procedures and training, and maybe we'll do some product or service development or some other things, right, that would otherwise be indirect expenses, and we have employees do those things. But if we're not billing that time, right, that really can have a significant impact on our rates over time, right, because we've taken that money out of direct and put it into the indirect pool. And that's actually what I define as the double whammy effect to rates for government contractors. Remember, with indirect rates, we've got a numerator, or the pool, or the top number. We've got a denominator, or the base, or the bottom number. And the rate is calculated by taking the numerator and dividing it by the denominator. So if you have a numerator, right, that is smaller than the denominator, then my rate is less than 1. And if my numerator or my pool is bigger than the denominator, right, I have a rate greater than 1. And so what happens in the case of something like an overhead pool, which is typically allocated over direct labor? Well, if I take direct labor out of the base, I'm shrinking the base. And if I take those same dollars and I now put them into the overhead pool, I'm expanding the pool at the same time that I'm decreasing the base. And that's why I call it that double whammy effect on the indirect rates. This is, again, where PPP forgiveness can have a positive impact, because if I had to reduce my direct pool, right, I reduced my direct labor by moving some of those employees into an indirect state. If I can now apply some of that PPP forgiveness to the indirect pool, I can shrink my overhead pool again and hopefully get my rates back in line to where they were or where I need them to be. Here, I want to walk you through a couple of examples of what some rates might look like, especially as you start to apply forgiveness. So really, don't get caught up in the exact dollars here. Kind of take a look at the bottom line rates for fringe, overhead, and G&A. So you see that we're at 32.2, 267, and 20.94. This was my rates before I did any application of the PPP forgiveness. My first scenario is to say, what if you were able to apply 100% of forgiveness to labor? And that might be possible for some of you, right? With a long enough period between 8 and 24 weeks, many of you may have enough labor expenses alone to qualify forgiveness that you don't need to look at any of the other categories of eligible expenses. So in my scenario here, what I did is I applied, again, 100% of my forgiveness, in this case, $100,000 of forgiveness to labor, and I did an 80-20 split. Again, just a sample scenario here. So you see now the resulting rates, and let me just do a quick, and I've got a summary slide at the end, but we went from 32, 267, and almost 21 to now 48%, 174, and just above 20, right? Well, why did that happen? Well, you know, my fringe rate went up significantly from 32 to 48%, because what did I do? I reduced my dollars, right? If I said that I reduced my overhead and G&A labor, well, overhead and G&A labor are in the base of fringe. So if I have smaller amounts, guess what? The pool is bigger, the base is smaller, and so the rate's going to go up. And that's exactly what happened here with my fringe. But it had different effects on overhead and G&A, right? It brought those pools down. My next scenario here is to walk you through, what if I just focused on 60% of my forgiveness applied to labor and 40% applied to other expenses? Now, I still did a total 80%, 20%, $80,000, $20,000 applied to my overhead and G&A pools, but I split it to 60% labor and 40% to other expenses that would otherwise, again, be eligible expenses. And now you'll see that my fringe still went up, but not quite as much. My overhead came down, not quite as much, and the same thing for my G&A. And so now what I've got here is a summary for you. So you see the before, that's what we talked about. You see the middle line is where I applied 100% to labor. And then the bottom line is where I applied 60% to labor. Look at that multiplier on the far right, though. That, to me, is really what the telltale sign here is, right? Because at the end of the day, and again, these numbers are all fictitious, so they're not out of line for some companies, especially for a manufacturing company having a 267% overhead isn't wildly crazy. But you see over here to the right, that multiplier at the end, and that's what we always have to be concerned about. Yes, we are concerned about individual rates, but we have to remember that as one rate goes up, another rate might go down, vice versa. But as we carry those through to our multiplier at the end, that's where the real effect is. And you'll notice that here in this scenario, by applying 60% labor, I had the greatest impact on my multiplier, right? I was able to bring my multiplier down, hopefully something more in line to where I was before PPP forgiveness and the issues that I was having that caused my rates to get out of whack. Something else to discuss here with indirect rates, right? Many contractors rely on actual historical rates. What we find is that, and we certainly find this with a lot of our small clients, they don't develop budgets. And that's where I should insert here and remind everybody, right? The best rates for proposals and for provisional billing rates are budgeted rates where I'm looking forward, that I really take a good look at a top-down and a bottom-up approach to my budget looking forward, right? Because I'm predicting what's going to happen. That's those are the rates I should use for proposals and the rates that I should use for billing purposes. Well, the next best rates that I can use, and where many companies end up, is looking at my actual historical rates. Right? So we've had clients who've contacted us recently and said, hey, 2020 is closed. We want to calculate our actual 2020 rates so that we have good rates to use for the rest of this year in our proposals and billings. And that's acceptable. DCAA will accept it. Other cognizant agencies will accept it, because again, it is those rates are at least built on something solid, right? We can look at the actual numbers and we know how we got there. The problem here is going to be, and here being 2020, and now as COVID and its effects continue to roll through 2021, our actual rates that we calculate for 2020 and 2021 are, for many companies, could be wildly out of line with where they were in 2018, 2019, and where they plan to be, after this whole pandemic. In fact, we just went through this with another client where DCA contacted them actually late in 2020 in December and said, hey, reminder, we need your billing rates. They called us, so they needed the billing rates for 2021. They called us, we looked at where they were through November of 2020, right? Because we had those actual numbers. But when we compared those actual rates for 2020 to where they had been in 2018 and 2019, they were just completely out of whack because of everything that happened last year. And so in fact, we said, hey, and then talking with the client, they said, well, looking at 2019, and they finally put together a budget, which was exciting. They said, well, when we look at 2019 and when we look at where our budget is for 2021, 2019 is actually more in line with where we think we're going to be with 2021. We were able to take both of those and essentially ignore 2020 in the middle with DCAA and say, here, you got to ignore 2020, right? Everybody knows it's a mess. Look at 2018 and 2019, look at our budget for 2021. You'll see the trend makes sense there, and that's what we're going to use. So just keep that in mind internally for yourself and for any auditors in the future, right? Auditors are going to come along and say, right, we always want to look at trends and see if something happens. Just a reminder, 2020, 2021, right, we had PPP forgiveness, we had whatever the other issues were that affected those rates, and we want to be careful in how we consider that going forward. And a reminder from what I said on the previous slide and showed you that PPP forgiveness can increase or decrease any specific rate, and it can have a mixed impact overall. It could, in theory, increase or decrease the overall billing multiplier, though PPP forgiveness should decrease your overall billing multiplier over time. Liz, another polling question for us, please.
All right, very timely. So this is going to be our 5th question. Are actual historical rates used for proposals and negotiations? The poll is open. Jenny, do you want to jump in and see if we can handle any questions?
Yes, we actually have a follow-up to the previous question that Robert had answered. What if the contractor does not apply for PPP on his own? Can the business then apply that compensation for forgiveness?
So I'm not sure I understand the question. If you say the contractor does not apply PPP on their own, can they apply compensate? I guess I'm a little lost on that. I will answer it this way. So one, to be clear, you can get a PPP loan and not apply for forgiveness. I'm not sure why you would do that, but you could, in theory, right, have a PPP loan and decide to treat it as a loan and to not actually apply for forgiveness. And in that case, you would have nothing to address here from a government contractor perspective, right? Because you didn't get any other credits, so you have no credits to process through. You could, in theory, I'll say as well, right, you could apply for forgiveness and not get the full amount of forgiveness. So that is also a possibility that maybe you end up applying some expenses that are not eligible and otherwise get kicked out. You'd have to address that appropriately in the actual forgiveness amount that you get in comparison to what you applied for. And otherwise, if whatever that question is, if somebody wants to contact me, I'd be happy to chat in more specific detail.
Very good. We're ready to shut the poll down. 79% of the audience say yes.
And that is true, right? We always do look at historical rates for proposals and negotiations. We might need to ignore 2020 and 2021 from a trend analysis perspective. But we always do look at historical rates, you know, when we're preparing proposals or negotiations or preparing budgets. All right, let's talk about some of the best practices and the record keeping requirements that we mentioned. Separate GL accounts, really critical for things like the FFCRA sick leave. Those are the items that qualify for those tax credits that Stephanie talked about early in today's presentation. And again, this is sick leave that is outside normal PTO. That is one of the things that is really tricky about all of these COVID programs, is that employers already have their own PTO programs, which may include sick leave. Maybe they have a separate sick leave item. However you have that set up in your benefits package, again, that is your standard stuff that is treated the regular way. If you have the FFCRA sick leave, or that expanded FMLA kind of stuff, and there's paid sick leave, you're going to need a separate GL account to account for that, so that, again, when you go to apply for forgiveness, when you go to apply for the tax credits, that it's easy to identify and segregate, report those dollars. It's easy to identify those kinds of dollars on the incurred cost proposal, as an example, right? So in my fringe pool on the incurred cost proposal, I would have a GL account that says, PTO expense, right? My regular PTO. I'd have an account that said, FFCRA sick leave. And if I got my tax credit, then so I would have it in that column. Then I'd have a credit in the adjustments column for the tax credit I got back for that sick leave, so that I'm backing that out of my rates, right? I want to show that my regular PTO expense is an allowable expense. My separate paid sick leave was here. I got the credit for it. I backed it out. It's accounted for appropriately. Loan forgiveness income. This is not operating income. It shouldn't be at the top of our recommendation, right? It's not operating income. It shouldn't be at the top of your income statement. We recommend that, companies put this in other income at the bottom. Clearly label it, identify. Don't even bury it in other income, because again, many companies truly have other sources of other income. You don't want it lost in there. Stephanie mentioned, and I can tell you, I know that we participated in Ohio. Ohio had a $10,000 development grant that they gave out to businesses as part of COVID relief. We know that other states and localities have various relief programs, whether it's a reimbursement of expenses or grants or other kinds of things out there. Make sure that you have separate GL accounts that identify and account for these things. Not only are there issues for the incurred cost proposal, but there are various tax issues. It's important to note that when I opened today's presentation and I talked about the high-level tax issues with the IRS, we were talking about federal income tax. States are treating PPP forgiveness and some of these other programs differently. So just because an item may or may not be taxable at the federal level, it may and likely will have a different tax treatment at the state or local level. And again, that's something that you are going to need to be able to support. And it varies state by state. I will tell you that the AICPA, I do know in their COVID-19 relief information, they have a chart that tracks the state by state tax treatment. Some states have not finalized that. Again, keep in mind, some of you also have local taxes. I know in Ohio, for example, in Columbus, we have a local income tax, and some of the things that are treated differently at the local level as well. Your payroll tax expense, again, your regular payroll taxes separate from any tax credits. Be able to identify the appropriate items. If you have a deferred payroll tax expense, if you took part in that program last year, we would recommend, clearly having a deferred payroll tax expense line item again in the general ledger, so it's easy to reconcile all of these amounts, as well as your payroll tax liability and deferred payroll tax liability. Right. So again, we would normally have a payroll tax expense. We would have a payroll tax liability, right, that offsets that on the balance sheet until we pay it. In the case of deferred payroll stuff, right, again, we want the different accounts there to be able to track those. I've mentioned a few times a PPP loan forgiveness worksheet. Document which expenses you claimed, and again, some of this is going to be different for government contractors, right? So it's one thing for a non-government contractor to say, here are my payroll records, I'm taking this lump sum dollar payroll, right, and I'm applying it. And from a payroll perspective, non-government contractors probably don't have much else to worry about. They're not going to get any other questions about it. But for government contractors, when DCAA or another cognizant agency comes in, they're going to say, okay, you used $100,000 of your PPP forgiveness and applied that to payroll. Well, which payroll accounts exactly did you apply it to? Did you apply that to direct labor, to overhead labor, to G&A labor? Was some of that applied to some other labor account? you're going to need to be able to identify that and support that. So what we recommend is that should not be an afterthought. You should be thinking about this as part of your PPP forgiveness. Unfortunately, we know that some companies have already applied and received, or at least already applied for forgiveness, and maybe didn't think about this. For those of you that have not yet applied for forgiveness, or if you're in the process of applying for a second draw loan and you're looking at forgiveness, you know, as I said earlier, kind of play with the numbers, I say with my air quotes. But, you know, if you're applying for $100,000 or $300,000 loan, sit down and look at the time period, look at the expenses that are incurred within that time period. You know, calculate and run the numbers a couple of different ways. Again, we've got a great indirect rate calculator. We actually just updated it and added a couple of tabs to make it a little easier for situations like this, where you can adjust the numbers in a pool and see what the impact of those changes are. So again, go out there to our website, download that tool, and say, okay, if I put some into labor and I put some into another expense, what does that flow through and look like on my final indirect rates? Liz, I think this is number 6 in our polling questions, if I'm keeping track.
You got it, that's right. Number 6, recording requirements include separate blank indirect rates, incurred cost proposals, GL accounts, or schedules. We'll go ahead and get this poll opened and closed here pretty quickly, and we'll save any questions for the end. Give it about 5 more seconds. All right, so we'll go ahead and close this down. We have another leading response here. 68% of the audience responded GL accounts.
That is correct, right? So one of our general recommendations from a record-keeping perspective is to have separate GL accounts to make it easy to track and report these dollars. So we've talked about a lot today, and we always have a rush to get in other polling questions. So we do have another polling question here in just a moment to give you an opportunity to get your credits for today. I see we've got several questions out there. Get your other questions in. I'll put the other polling question here on the screen, Liz.
Sounds good. This closes us out for the final poll question, actually. And the question is, what is your level of comfort on the topic of PPP forgiveness now? So you can let us know where your comfort level lies. And if you, like Robert said, want to have a follow-up question, need additional help, the Left Brain Professionals team would be more than happy to continue the conversation. We'll leave this poll open for about 5 more seconds. Great, thank you. We'll close that down. It looks like a lot of people have learned a lot today and I think they're getting the hang of it, but expect to still have questions. So that's great. Thank you for letting us know.
Yeah, and as we enter the Q&A session here, I did want to get our contact info on the screen. Again, we'll work to answer as many questions as we can here. We'll send follow-ups. Oftentimes questions come up later, right? Later today, next week. Do not hesitate to contact us. Our email address is there on the screen, support@leftbrainpro.com. That goes into our help desk tool. So there are multiple people on our side who can answer that for you. You can access this presentation and other stuff on our website. A lot of information on social media and more upcoming webinars here on the Govology platform. I'm sorry. Got my terms crossed here on the Incorsa platform. My apologies, please. And our Q&A questions, please.
So the first question, how does this apply to fixed contracts?
So fixed price contracts, again, would still, it's still going to come into your rates, right? So At the end of the day, if you're a government contractor and you participate in any of these COVID-19 relief programs, and again, let me make clear, whether that's at the federal, state, or local level, and you're otherwise getting reimbursed for getting some kind of credit or getting reimbursed for these expenses, you do have to account for those according to FAR 31.201-5. You have to incorporate those into your rates. And so at the end of the day, whether it's a fixed price contract, a T&M, a cost type contract, at the end of the day, PPP forgiveness or these other programs are going to affect your rates and will flow through accordingly.
So the next question, can you talk about Form 7202 credit for sick leave for certain self-employed individuals?
I am not an expert on that form and would not prepared to answer that question right now, but I'd be happy to dive into that separately.
Okay, our next question, our potential maximum PPP forgiveness is greater than we can productively apply to our OH and G&A rates in the fiscal year. Can we split the ICS unclaimed costs to reduce OH and G&A in the next fiscal year?
No. Again, for incurred cost proposals and rates, remember, we're always looking at the appropriate time period, right, for that fiscal year. So if you have a credit that was received for that fiscal year, then it needs to be applied to those rates for that fiscal year. You can't take a credit and apply it across multiple fiscal years. You know, in that situation, then it sounds like you may be in a situation where you're going to have to apply some of those PPP forgiveness to your direct cost. There's nothing that says you can't do that. It's just that now that's going to potentially affect or likely affect your billable status for those costs, right? So in the case of a cost type contract, if you are applying PPP forgiveness to direct costs on a cost type contract, then those direct costs on that contract are not going to be billable to the government. You could, in theory, apply them to, you know, direct costs on a fixed price contract, and because you have a fixed price contract, you know, you would still be able to bill the government, but it certainly gets a little dicey there.
Our next question, could payroll costs qualify for the ERC if they are outside the covered period of the Ppp loan forgiveness, even if those costs are direct?
Yes, they could, because again, it's a separate program, and the time period that we talk about, the 8-week or 24-week period, is specific to PPP loans, though keep in mind that with any of the programs, there are still specific dates of expenses that qualify.
Okay, our next question. We have already applied for PPP forgiveness using only payroll and related payroll costs. For indirect rates, is that all we should apply the proceeds to? For incurred cost submission, we plan to apply to the different pools.
So what I will tell you is that this is a great question, and this, so you're kind of going to be working backwards in your strategy a little bit, right? So you've already applied for forgiveness, and you said that you applied those dollars to payroll and payroll related expenses. So for whatever that time period is, right, so you imagine back to the little chart that we had kind of early in the presentation where we showed an 8-week or a 24-week period, whatever your time period is on that calendar that you used for PPP forgiveness, those same expenses will have to account within the same time period for your incurred cost proposal. Now, again, from a PPP forgiveness, and I'm just going to use round numbers, you might have said, hey, we'll apply $100,000 to payroll, and let's say you applied $20,000. So let's say $120,000 loan and you applied for forgiveness. Maybe you applied $100,000 to payroll and $20,000 to non-payroll related types of expenses. You're going to have to use that same breakout on the incurred cost proposal, but the labor, you're going to have to make sure that you break down and show that you have You know, how much of that is overhead labor, how much of that is G&A labor.
Okay, and it looks like our final question in the questions box, where can I get more information on the ERC?
Stephanie, I'll toss that question to you.
Yes, so let me see. You know what? Let me take a look and see if I can find a good link for that, and we can pass that along. Most of the agencies are providing, you know, lots of guidance out there on how the different programs are applied, so we can certainly provide that information afterwards. I did want to actually go back to one of the first questions that we heard. I think I was able to find over the last several minutes, I think one of the FAQs from SBA that specifically addressed this question about whether you could use an independent contractor or sole proprietor, just to confirm that question. So the question was, as is put forth in this SBA guidance, is should payments that an eligible borrower made to an independent contractor or a sole proprietor, so that's kind of the contractor employees that you use, be included in the calculations of an eligible borrower's payroll costs? And so the answer to that is no, that any amounts that an eligible borrower has paid to an independent contractor or a sole proprietor should be excluded from the eligible business's payroll costs. So that is what we had said before. You know, they are not considered the business's employees, and so therefore it's not considered payroll costs, and they would not fall under that other separate exception as that is dealing specifically with software and that sort of HR support.
That looks like all the questions I have in the questions box.
Wonderful. Well, it's always awesome when we have an opportunity to take the time and respond to all of the audience questions. So thank you, Jenny, for your help with that. And thank you, Robert and Stephanie, for a great presentation and taking the time to dig a little deeper into some of those questions. Robert, did you want to talk about upcoming information, or should we head on to that last slide to do some wrap up and make sure we talk about what's coming up next month?
Yeah, so next month we're going to be talking about automated bookkeeping and outsourced accounting for government contractors. That will be our third presentation this year on the Incurred platform. We have stuff already lined out through December, and in fact in April and May, give you a little sneak preview. We're going to take a deep dive on the incurred cost proposal. So in December, we talked about the incurred cost proposal a little higher level. Actually, in April and May, we're going to break it down into a two-part series, and we're going to walk tab by tab through each of the schedules in the incurred cost proposal and kind of talk about some of the pitfalls and specific information that goes on each of those tabs.
Excellent. So some great topics coming up, very timely. Also, 3 of Robert's topics from last year are available in self-study format. So if you would like to access these courses, you can access them on your own schedule, laying the foundation for government contract accounting, fundamentals of indirect rates, and then advanced indirect rates. And you can use the promo code LBP15 for 15% off those courses. Specific to the program today, there will be a course survey when you close the GoToWebinar control panel, and we'd always appreciate your feedback. And then you can log into your Incurred user account, or what we call your Incurred dashboard, to access your CPE certificate that will be available for you in an hour if you qualified for credit. The recording will be uploaded this evening, and the course materials are already uploaded, so you can access the handouts from the presentation today from your Incurred dashboard. So thank you so much for joining us today, Robert. It was wonderful to have you. Stephanie, thanks for being a guest. Jenny, thanks for helping with Q&A. We'll look forward to having you all back with us on March 16th. And until then, don't forget you can reach out to Robert and the Left Brain Professionals team if you have any questions. We'll talk to you all soon.